Good afternoon. Welcome to Washington State China Relations Council's webinar on the Chinese investment in the real estate sector. My name is Weng. I'm director with the WSCRC. Thank you for joining us. We're very pleased to have several real estate professionals with us today who work extensively with Chinese clients. They will be providing us with both in-depth and up-to-the-minute information about the Chinese real estate investment in the Puget Sound region and in the US. Before introducing our panelists, please let me provide you with a brief introduction to the Washington State China Relations Council and its sister organization, the Washington State China Relations Fund. Founded in 1979, the Washington State China Relations Council, aka WCRC or the Council, is the oldest state-level organization dedicated to promoting stronger ties between the US, Washington State, and China. We are a membership organization incorporating business, government, cultural, and educational entities, as well as individuals with an interest in China. Our activities include producing educational and networking programs, managing inbound and outbound delegations from and to China, providing expertise to help the public and private sector navigate the complex environment of doing business with China, and working with the local Chinese community. Since the onset of the pandemic, we have produced or co-sponsored many webinars on topics of interest to our members and friends. Some of our past webinars are on our YouTube channel. I'll post the link in the chat box in a little bit for you to visit. To learn about upcoming webinars, please check our website or sign up for our event announcement. Our next webinar is on April 6th, where leaders of American Chamber of Commerce in Shanghai will talk about business conditions for US companies operating in China. In early 2020, we established our sister organization, the Washington State China Relations Fund, a 501c3 charitable nonprofit organization to support our educational programs and to support local community efforts. We encourage donations to the fund, which will help us to continue with our work. If you'd like to know more about the WCRF or to donate, please visit our website at www.wscrf.org or contact us directly via email or over the phone. Now, let me introduce our panelists. So we have Holly Young, Senior VP and shareholder with Kidder Matthews. Holly joined Kidder Matthews in 2013, where she leads the Asia Pacific Services Group, specializing in the acquisition and disposition of investment and development properties. Prior to that, she was with the Regional Pacific Properties for 7 years, working in commercial real estate brokerage. She also worked as a financial auditor for Ernst & Young and founded Yangtze International Trading Company. Holly came to the US from mainland China in 1992 for graduate work, majoring in accounting and business. Fluent in Chinese and English, and with a profound understanding of the nuances of both cultures, Holly and her team have successfully helped Chinese investors navigate their real estate ventures in the US. Serving on the board of WCRC, Holly is an enthusiast in promoting business and culture exchange between the US and China. Holly is an avid supporter of many charitable organizations, including the Washington State Governor's Scholarship Foundation, China Tomorrow Education Foundation, St. Children's Research Hospital, the Habitat for Humanity, and DECA. We also have another board member who's a panelist today. So Paulina Wu is an associate in the law firm of Kenan & Gates. She focused her practice on various aspects of commercial real estate and agribusiness, including acquisitions and sales, real estate financing and loans, and leasing. Paulina's experience includes issues related to commercial mortgages and financing, farmland, shopping centers, and other commercial mixed-use properties. Paulina also has experience in addressing regulatory issues impacting the commercial real estate and agribusiness sector. This experience includes advising clients on mortgage lending licenses in various states and regulatory compliance matters affecting foreign investors under the Agricultural Foreign Investment Disclosure Act and analogous state statutes. We also have Michelle Weng as another panelist. Michelle is a global real estate advisor of Realogic Sotheby's International Realty in Seattle. Michelle represents clients with downtown luxury condos, east side estates, valuable land investments, and commercial properties. Trilingual in both Cantonese and Mandarin, Michelle utilizes her knowledge of the Seattle real estate market to get her clients the best deal while understanding the emotional and the financial demands of any transaction, evidenced with multi-million dollars in closed sales. And today's moderator is our own Nor Kokiard, the executive director with the WSCRC. For those of you who do not know his background, I'll just briefly note that Nor spent 35 years living and working in Asia. He was a resident in Shanghai for 18 years, where he served in a variety of roles for multinational corporations and nonprofits, mostly with Cargill. He also made some small investments in Chinese real estate when he lived in the Middle Kingdom, so he understands some of the peculiarities of the Chinese real estate market, as well as the perhaps oversized role the real estate plays in the portfolios of Chinese investors. So before we dive into the discussion, I'd like to go over a few housekeeping items. If you have questions to the panelists, please type them in the chat box. Nor will collect and raise them to the panelists during the audience Q&A session. And last but not least, please make sure to mute yourself during the webinar. So Nor, I'll let you to take it from here.
Okay, thanks, Mon, and good afternoon, everyone. And I especially want to thank our panelists today for joining us and going to share some information with us. Before we start our discussion, let me make a few introductory remarks about the subject. I think I'm going to start by saying, well, I've been now in Seattle almost 5 years. And since that time, I've seen quite a few new condo buildings go up, particularly downtown. And almost every time I ask, or almost certainly every time I ask, I say, who's behind that condo? It turns out to be a Chinese investor. So I find that the Chinese investors are actually remaking the skyline of Seattle. And then, of course, when I talk to people on the east side, they tell me that whole neighborhoods have basically become mostly Chinese neighborhoods, and that actually I think one of our panelists is going to talk about population-wise that Chinese, or at least Asians, are the majority of population in some of the suburbs now on the east side. So in today's seminar, I hope we're going to learn a little bit about the history of Chinese real estate investment, and then of course we want to talk about future trends. In addition, we're going to talk about some of the legal hurdles that Chinese investors might face when they buy property here. And then, of course, we want to understand why Seattle is so popular for Chinese investors. So a couple of facts to get us started. In 2017 and 18, Chinese buyers were the largest group of foreigners investing in residential properties in the US. They bought approximately 40,000 units in each of those years. In 2009, though, the purchases dropped to about 20,000, so they have. And in 2020, the latest numbers we have is about 18,000. To put this in some perspective, the Canadians would be in second place, and they bought about 80% of the properties that the Chinese bought during that period. Talking about popularity, in a recent poll by the website, it's called Juwei.com, which specializes in real estate for Chinese. Seattle is the most popular city for Chinese investors based upon search data. Following Seattle, the other top 5 cities were LA, Orlando, Irvine, California, and New York City. The most popular state for Chinese investment actually is California. Here, Washington only ranks number 5 when you ask Chinese investors what state they prefer. Washington is beat out by California first, Florida, Texas, and then New York. Now, as Mon said, I lived in China for 18 years. I was actually fortunate to invest in some property in Shanghai, much better than any US investment I've ever had. But in China, real estate is really important to people as an investment vehicle. So I'd like, Holly, if I could turn to you to start the discussion, to tell us why Chinese investors seem to be so interested in real estate. Why is it that that's such an important item in their investment portfolio? So Holly, over to you.
Oh, hi. Hi. Can everybody hear me? Okay. Nor, do you want me to answer that question or go with my presentation, with my slide?
No, I'd like you to, let's start, no, not the presentation yet. I'd like to know, because Chinese investors, yeah, Chinese investors seem to be very interested in real estate, more so than stocks or bonds or other types of investment vehicles. So could you tell us a little bit about why that is?
Yeah, sure. You know, real estate, you cannot reproduce the land anymore. So to any ultra wealthy investors is the foundation to diversify into their investment portfolio. It's also a hedge against their other investment, because real estate just by definition is not as liquid as securities, but in the same time, it providing that stableness. That's what normally investors are looking for. But why Chinese people are more attracted to real estate? There are a couple other factors playing here. First is, you know, a lot of wealth are built in investing in real estate in China. The real estate in China has maybe quadrupled, maybe even increased 10 times in the past 2 decades, like in major cities like Shanghai, Shenzhen. So, you know, it's easier to think, hey, I want to replicate, right? Repeat the same success in US. Besides that, also think about in China, the government owns the land. And then that's why there is such a global shopping spree for Chinese investors to invest, to buy real estate everywhere else, because they own the land perpetually. They can pass their wealth to their next generation, which is a golden opportunity to Chinese investors.
Get back off mute here. Thanks, Holly. I'd also add that other investment vehicles in China are not that mature. In other words, a lot of people would say investing in the stock market. It's getting better, but investing in the stock market in China has been somewhat of a Las Vegas type operation in the past. That's improving, but it has been true in the past. Mutual funds, other vehicles for investment, not so much. In China. That's developing now more, but there hasn't been an opportunity for people to invest. There haven't been that many options for investment. And real estate, as you say, in Shanghai, again, I bought in the early 2000s, and you're right, it's probably increased 10 times over 20 years. Yeah, so it's been a great investment, and that's what Chinese people are familiar with, and they've done well by it.
Yes, and also investing in like in the U.S. country, they're investing the channel. Everything is it's a established market, the legal system, the regulation. They feel protected. Mm-hmm.
Yeah. And you touched upon the other issue that is in China, you buy basically a land use right. Exactly. So the apartments, if you buy a condo or an apartment in Shanghai, you might get it for 50 years or 60 years. And that sounds great, but you don't really know what's going to happen at the end of that 50, 60 years. There haven't been many cases of ones that have rolled over yet, put it that way. Because the big buying spree started in probably mid-90s of when people started buying property on their own.
Yeah, absolutely.
Right. Okay, let's get more specific and let's talk a little bit about our own market here. So let me start with Michelle. And can you, I think you got a presentation, but can you talk to us a little bit about the residential market here and again, why Chinese investors like Seattle and what the market's like?
Hi, everyone. Yes, definitely. I am actually going into my presentation. I have some of that information as well, but I just want to say, you know, the market here has been growing, and we have a lot of factors, especially why Seattle real estate market is so booming, and that has to do with a lot of the technology boom that we have here with Microsoft and Amazon, a lot of people moving here for jobs, and of course other factors such as good schools, and University of Washington is here. So the life here is very good. And, you know, the quality of life is good here in Seattle. And then I can go into my presentation as well.
Okay. Mon, are you putting it up? Okay.
Perfect. So my name is Michelle Liang, and I'm a global real estate advisor and founding member of the Asia Services Group at Realogic Sotheby's International Realty, owned by Dean and Stacy Jones. I'm first generation Chinese and a Seattle native. I went to school here in Seattle University and majored in business management and finance. I do have a lot of family in China, Shanghai, Guangzhou, and Hong Kong. You know, great cities. And I've sold a lot of residential to Chinese investors, primary homeowners, represented buyers on the purchasing side with land, especially in the Chinatown International District. And I've even leased warehouses to Chinese-owned restaurant groups. I was the sales director for Coda Condominiums. We can go to the next slide. Thank you. And also won for being the top sales at Nexus Condominium. I was awarded with a Rolex. And I've had the pleasure of, you know, working with helping a lot of international Chinese citizens and new immigrants who have H-1B visas, and also multi-generational Chinese families who have already resided here. And, you know, my clients range from all over the world, but, you know, today we're focusing specifically on Chinese investment. And I'd like to talk about my company, which is Realogic Sotheby's International Realty. We are the #1, we can go to the next slide, please. Thank you. We are the #1 largest Sotheby's International Realty affiliate in the Pacific Northwest, with 6 offices in Seattle, Madison Park, Bellevue, Kirkland, Mercer Island, and Bainbridge. And just last year alone, we had a record-breaking sales volume of $2.8 billion. And our company, Sotheby's, has you know, just remarkable branding and marketing, as well as our global network and reach with 75 offices worldwide. And I'd like to get into Washington State in particular, why a lot of you know, Chinese buyers do look at Washington State. And we can go to the next slide, please. Thank you. For the second time, Washington has been named #1 in the US News Best States ranking, which is the first time ever that a state has won this two times in a row. And, you know, with Washington's low carbon energy system and robust secondary education system, we continue to rank amongst the nation's best. And so does our state's economy, which is the fastest growing in the nation. According to the Washington State Research and Data, Washington State's population is estimated at 7.6 million, and Asians make up the largest minority racial group in 2020, with 9.2 of the Washington's total population. A lot of our Chinese buyers, you know, do look at popular areas, which include the East Side and Greater, and this includes Bellevue, Kirkland, Redmond, Sammamish, and Mercer Island. And then we can go to the next slide, please. Thank you. As Noor had mentioned earlier with Juwai, you know, a lot of the cities have been inquired and sought after by these Chinese home buyers, and Seattle is ranked, you know, top 10, of course. And it's really, you know, it started in 2013 when Seattle became the nation's fastest growing city. in 2018, was the Amazon boom. And according to S&P Realogic Case-Shiller Home Price Index, prices for homes in Seattle were up 13.6% in December compared to the year before. And nationally, prices only rose 10.4% year after year. And Seattle has maintained its #2 spot behind Phoenix. And keep in mind, Phoenix does have half of the sales price of homes as they do here. And specifically, as we get into more in depth, we can go to the next slide, please. For Bellevue, Bellevue has become a majority minority city. And this was just released by the US Census Bureau recently. To give perspective, the Seattle Bellevue metro area is the 6th largest Asian population in the United States. And being the 5th largest city in Washington, Bellevue has a population of 150,000 and growing. It has a current growing rate of 0.74% annually, with a median household income of just over 162,000 and a median home sales price of just a little bit above $1 million. And that's in comparison to Seattle, which is the median sales price of 710,000, and overall in King County at 687,000. And this was all from Redfin. And the Asian population in Bellevue has now made up the largest percentage of the entire population of Bellevue at 39%, in comparison to 38% of Caucasian. So we're seeing a lot of increase year over year, and now the Asian population in Bellevue is now the largest. In fact, and we can go to the next slide, please. Thank you. In fact, so all of the East Side and Greater have been seeing a huge boom, as I mentioned earlier. And a lot of Chinese home buyers are looking for, good school districts and lower crime stats, accessibility and convenience to stores, restaurants, and, having the shorter commute time. Of course, it needs to present as a good investment as well. And now there's actually, a lot of Chinese community that's been very prevalent in a lot of these areas. So there's a lot of Chinese restaurants and franchises and grocery stores that have been, coming up. And, a lot of other factors also include businesses where, owners own them, as well as, where they're working. If the company such as Amazon is moving to Bellevue, some of those Chinese home buyers might be moving over there because they're working over there as well. And with the school districts, Bellevue, Sammamish, Mercer Island have continuously been top ranked in our nation, in our state, for best school districts. In fact, in the Bellevue School District, 2020, there was 42% Asian. And that's compared to, 33% Caucasian and 13% Hispanic. Even at University of Washington, where a lot of Chinese families have their children going to, because it was ranked #8 globally by the US News, and a 26.7% of Asians were enrolled as of winter 2021. So you see a lot of home buyers looking to invest their real estate here while their children are going to school here as well. And then can go to the next slide, please. Thank you. On average, the data and talking to multiple of my brokers in my Asia desks group, as well as a few of the banks, HSBC, Cathay Bank and as well as East West Bank, we're seeing a lot on average Chinese buyers purchasing at $1 million and above. But of course, you know, that's not always the case. And we work with buyers, of course, at every price point. In 2019, we did see a surge of the middle class Chinese home buyers buying as well. And the price points were a little lower than $1 million, and they've started to actually go into getting a mortgage. But, you know, no matter what price point, if they're not using cash, one thing that we've seen is that a lot of these home buyers are putting down a significant amount of down payment, even when it's not required by the bank. And, you know, we've seen Chinese home buyers buy all product types. And I think it really just depends on what stage in their life that these buyers are at. And we've seen, you know, single family, condominiums, townhomes, new construction. And this new construction actually is a picture of Greystone, which is a new project that my brokerage is representing on First Hill. You know, I think getting into that, especially if they have families, they're going to be looking for a single family home with a good school district in mind. If they're a single or a couple young professionals, especially on an H-1B visa, so they tend to go more for condos, more so with new construction, which is very similar to the lifestyle they have in China because, you know, a lot of condos, you know, they have the accessibility and the convenience of everything that they need. And they also don't have to worry about such things like yard maintenance, for example. And speaking of new constructions, I think Nora touched on this in the beginning, but correct, there is a lot of, you know, developers that are coming from Asia and China, and they've done joint ventures with a lot of the local real estate companies here. So for example, Greystone, which is Daniel's Real Estate locally developing, has a joint venture with Greentown from China. And then Spire with Laconia has partnered with Weng, which is Vanke. And, you know, Create World is also at the Emerald, also Asian developer, and Berard Group for Nexus is also a Canadian Asian developer, and Dolly from Coda, they're all from Taiwan. Getting into the new construction, a lot of times, as I mentioned, a lot of H-1B visa holders, there are a lot of companies, and we can go to the next slide, please. A lot of companies in Seattle and on the east side that are the largest employers of H-1B visa holders. And for example, at Amazon, you know, they make an average of $140,000 annually. And with the new H-1B visa policy change, there could be potentially more graduates coming to Seattle because of a policy change that could affect having a higher earning here in Seattle over than the Bay Area in California. And in Washington State, we do not have the income tax, which is very attractive. And so where is the money coming from? You know, if it's not H-1B and they're not working here, China has been making it a little bit more difficult, tightening the restrictions on getting the money out of the country. Typically, it's around $50,000 that, you know, are per person that's able to get out of the country, especially if you have a valid student visa. You know, with a family of 3, you could get up to 150,000. But, you know, there are other solutions to also get money here, especially if you have your own business. And, you know, banks such as HSBC and Cathay Bank and East West Bank, and they have, you know, ways to qualify these buyers with only 35 to 40% down payment and no income or credit verification. And I've listed a few from James and Martin and Steve as well, who I've been in touch with. And then I'd just like to get into also talking about COVID-19, how that
Michelle, if I could just jump in, we are running a little short on time, so could you wrap up a little bit? Cool.
Yes, definitely. This is one of my last slides. So, with the pandemic, we've seen last year there was a lot of, uncertainty, especially in a time where all the countries were locked down. So there was a little bit slower buying, but I think the pandemic has really allowed many to work from home and accumulate and save their disposable income, which helped build a sizable down payment, and followed by the urgency to take advantage of low interest rates. First-time home buyers have surged and felt the pressure to buy their first home, as a lot of the prices, as you've seen in Seattle, have dramatically increased, while realizing, they might have to work from home even after the pandemic ends. And many millennials have moved into home ownership and started families. The oldest millennial this year will be turning 40, while the youngest will be turning 25. And there's been an increase in consumer confidence and a positive outlook on a strong economy. So the inflation will continue to increase the value of assets, which is bringing the volatility to markets. In the past, inflation has had a negative impact on consumer products, but we're seeing a shift towards the increase of price of valued assets such as real estate because of the multiple buyers in the market. And as Holly mentioned before, Chinese really do tend to like to buy tangible assets such as real estate versus stocks, which are a little bit riskier in their mind. Seattle, I think, is very isolated from the rest of the US with our growing population and a lot of the tech companies that continue to flourish here. We have Microsoft and Amazon and many other companies, Google, Facebook, also, a lot of people moving here for the extremely high paying jobs and access to company stock. And as also, the vaccine, of course, and continuous historic low interest rates and the new presidential administration could also have some impact as well. This week we moved into phase 3. So, very optimistic.
Okay, Michelle, I'm going to have to interrupt because I want to make sure that our other speakers get a chance to make their presentation. So
sure. Okay. The next one is the last slide. So just thank you so much, everyone, for allowing me this opportunity. And then I'll thank you to my panelists and everyone who I've talked to and collaborated with me, my Asia desk brokers, and Dean and Stacy and our marketing team. So thank you, Nora and Man.
Okay, and we'll come back to you in the Q&A. I'm sure people will have questions. Sure. But besides the residential market, I want to move on and talk a little bit about the commercial market, because I know Holly's got some slides, and you'll see there's been, in the past couple of years, there was some really big Chinese investment in the commercial market, but it's dropped off. So Holly, let me turn it over to you and tell us a little about what's going on the commercial side.
Okay. Yes. I'm very excited about this opportunity to share with you about my experience, because I was lucky enough to have the front row seats to witness the highs and lows of Chinese investment in commercial real estate in US and also in Greater Seattle market. Man, can you get the slide? Yeah. I'm Holly. I am the head of Asia Pacific Services with Kidder Matthews. Kidder Matthews is the largest independent commercial real estate firm in the West Coast. We have about 21 offices up and down the coast with 800 professionals. And our group is not that big, but we're pretty I wouldn't say powerhouse. We pretty much did quite a few high-profile transactions with Chinese investors, developers, and private investors. Man, can you? Yeah. I'll be fast. We can go through this. Can we go to the next one? Okay. You know, looking back, we can look at the last decade. What happened to Chinese commercial real estate investment in the U.S.? Obviously, the peak is 2015, 2016, and 2017. It used to be when I first started in commercial real estate arena, there's not much money coming from mainland China. It's just a blip. And if you see now, it's going back, maybe even worse than it was before 10 years ago. I remember in the heydays in 16 and 17, Chinese investors are in the headline almost daily. You just see Hainan, you know, Anbang, all those big investors coming with lots of money, went on a shopping spree, buying everything, right? From, you know, New York office tower to luxury hotels, to vineyards, to golf courses. You know, our Newcastle golf course was sold to Hainan Group, right, in 2016. That just took everybody probably by surprise, like, wow, they're coming big. And then now it diminished. There are a lot of reasons behind it. It's, you know, in, Man, can you go to the next slide? Oh, I have to go over this. So they went on a shopping spree. What are the products they have in their shopping cart? So let's take a look. The highest probably are hotel and offices, because, you know, if you buy first class offices, usually, I mean, it's a first class and it's finished product, and that takes, you know, a higher dollar value. And what stands out about Chinese investment in CRE in our market is also there are more mega deals. There are quite a few deals that's over $1 billion, and you will see the dollar volume is high, but not necessarily the number of transactions compared to other foreign investors like Canada, Germany, or other countries. Actually, you know, my firsthand experience is there are a lot of development sites changed hand because a lot of investors coming here, they want to buy land and they want to develop. Man, yeah. Our Seattle market, it's very similar to the whole US market. 2015, you see there's a $1 billion transaction, but in that, you know, like I just explained, Columbia Tower was sold to Gall Capital Group, and just that one deal is already 700 million. So that's already 70% of this whole dollar volume in 2015. 2020, 2021, it's not a zero, but I think Real Capital Analytics, you know, where we get our stats from, I think they only track cross-border real estate transaction for the deal size that's over $5 million. Man, can you go to the next one? Okay, that's you know, very similar to what Chinese investors are buying in US, you know, mostly hotel and offices, apartment, you know, and I mean, they're buying everything, but mostly, you know, the bigger dollar value portion are hotel and offices. That's a look back about what happened, right, in the last decade. What's going on now is basically Chinese investment in US is kind of like it's in a grinding halt period. You can see it has cooled down. Chinese investors has pulled away from US, mostly because there are quite a few reasons. The policy control from Chinese government, the capital control, and the trade war tension between the two countries. Yeah, and that made it really hard for the money to come over to the US. And there is a shift about what they are interested in. I think it also, has a lot to do with what cycle we're in. Because of COVID, COVID definitely has impacted negatively in commercial real estate in the last year. But unlike the financial crisis we experienced in 2007, 2008, we hope this is short-lived because it's not economy. It's more like a health-related disaster. And not all sectors are hit by COVID as badly as like a financial crisis to the commercial real estate market in 2008 is across the board. But COVID, the retail sector is hit really hard. Hotel, very hard. Nobody's traveling, nobody is visiting. So, but logistics, some sectors actually might have benefited from this COVID. So there are some kind of emerging industry. And then, of course, there's a focus shift in investors' appetite. Industry and logistics, investors are shifting more towards these two sectors.
Mm-hmm. Great.
Yeah.
Good. We got a little bit more. Yeah. Okay.
Well,
you've addressed those things, I think.
Yes, we can keep going. I think just looking forward, right? The short term is with the vaccine rollout. Like I said, the commercial real estate sector is hit by this COVID, but it is not as bad as originally actually predicted at the beginning of the COVID. We still have a stable stream of business we're working on. Short term, if you look at the bar chart, this is almost like a no-brainer. I was invited to do a lot of economic forecast before. Sometimes it's tough to forecast, right? Because there's a lot of things can come into play. But this one is actually easier because if you look at the bar chart, basically 2020, 2021, right now there's not any cross-border investment dollar in play. So it only has, the way I look at it, I'm very optimistic, right? It only has one way to go. It has to go up, right? And in the foreseeable future, it's a question mark if it ever will go back to the peak, like 2015 and 2016. But long-term wise, I believe, the tension will ease a little bit. I hope the government, the two largest economy will work together. It's in their best interest, in US best interest, in China's best interest, to work together to encourage, promote more exchange, cultural exchange, economic exchange between those two countries. And, we will see the investors coming back to the US market because the fundamentals hasn't changed. It's the political environment, the capital control, and COVID. And all this, I think will ease up.
Okay, so Holly, let me switch to Paulina because she's actually going to address some of those issues that Chinese investors, some of the hurdles that Chinese investors come about that they have to get over when they want to invest here. So Paulina, could you explain a little bit? I hear about CFIUS, I hear about other programs or other systems the Chinese have to go through to buy property here. So would you explain a little bit about some of those issues?
Nor, absolutely. So first of all, thanks so much to Nor and Mon for putting this together. And thanks to Holly and Michelle for the great background that they both provided. Without first digging into the specifics, as a general disclaimer, although Chinese real estate investment covers property ranging from residential to commercial, the considerations I'm going to go over quickly today will mainly focus on commercial real estate. In particular, the larger investment properties such as office buildings or multi-use buildings that Holly highlighted in her presentation. The following list also is, of course, not comprehensive. The first consideration I'll start with when it comes to a Chinese investor is structuring, and that's how are you going to structure your ownership of your real property. There's two general ways to structure foreign real estate investment, and that's complex structures and simplistic structures. Complex structures are the very complicated organizational charts you're thinking of, where ownership of the real property goes through various offshore investment vehicles. These are the cases where you see multiple Cayman Island entities and holding companies that run through the structure. The alternative for a simplistic structure is to set up a limited liability company in Washington as a pass-through entity that directly owns the property. When you, as the investor, want the money, you collapse the LLC. Taxes are a huge consideration when it comes to how to structure ownership. The investor also should consider the cost of maintaining the structure. For example, in a complex structure, there are costs such as paying taxes and maintenance fees to keep each entity you created active. The second consideration I'll highlight is the one that Norm mentioned, which is CFIUS. CFIUS stands for the Committee on Foreign Investment in the United States. CFIUS's purpose is to determine if certain foreign investment transactions impair U.S. national security. Accordingly, CFIUS has jurisdiction over any transaction, including real estate, where foreign investors are acquiring property that could impair U.S. national security. So when CFIUS arguably has jurisdiction, the parties can elect to voluntarily notify CFIUS of the transaction. I think the question then would be, why would you possibly want to voluntarily notify CFIUS? The answer here is because once a transaction is cleared by CFIUS, it is cleared forever, with some limited exceptions, of course, and CFIUS-related risk is largely eliminated. In contrast, if you do not voluntarily notify CFIUS, CFIUS can review at any time a transaction that it did not clear prior to closing. And although rare, CFIUS does have the authority to require a transaction to be unwound entirely. So if a transaction arguably is within the scope of CFIUS jurisdiction, parties normally will voluntarily file if they perceive a significant threat. To quickly go over the CFIUS process, usually the parties will put together a pre-filing notice, and the staff will give preliminary feedback that the parties can incorporate. Once the feedback is incorporated, the parties can submit a formal notice to CFIUS, where then they'll start the formal review process and eventually come out with a ruling. The ruling will be either that the transaction is cleared without any mitigation conditions, which means you're in the clear. CFIUS can also determine that the deal is prohibited and suspend it entirely, or CFIUS can clear the transaction with mitigation conditions. Mitigation conditions will depend on the transaction, but they can be as simple as limiting access to certain facilities to US citizens. To give everyone an example of a worst case scenario of CFIUS review, I want to highlight that a couple years ago, a Delaware corporation called Rouse Corp was owned by 2 Chinese citizens. Rouse Corp purchased 4 Oregon wind farm companies without seeking CFIUS clearance. One of the farms was within the vicinity of restricted airspace at a naval weapons system training facility. After closing, CFIUS received notice of the deal and told Rouse Corp that they wanted to review. After their review, CFIUS ordered Rouse to stop construction on all of their projects and divest all of their interests within 90 days. Again, this is a worst case scenario and ended up going to litigation, which was extremely costly for everyone involved. But it just highlights how it is important for the parties to consider CFIUS implications.
And Paulina, can I jump in? Is this just for commercial, or what if I want to buy a big house that's on the Hood Canal with the submarines going by every day or something?
So there's multiple exceptions to CFIUS, and certainly the regulations need to be dug into to see when it applies, but there is an exemption for single housing units. So typically, if you're buying a house, CFIUS won't apply. Okay. The next thing I'll touch on is FERPTA. FIRPTA is the Foreign Investment Real Property Tax Act, and it's a withholding tax that applies to transactions. Generally, the disposition of a U.S. real property interest by a foreign person, so that includes Chinese investors, is subject to the FIRPTA withholding tax. There are exceptions to FIRPTA, but as a general matter, the transferee, which is the buyer, whether U.S. or foreign, must deduct and withhold a tax equal to 15% of the amount realized by the transferor if the transferor is a foreign person. The transferee must then report the withholding tax and remit it to the IRS. From the transferor's perspective, they have to report any gain in their federal income tax return and pay any taxes due. In my practice, which is usually representing sellers and buyers, FIRPTA comes up when buyers will ask sellers to certify that SIRPTA applies or not. Buyers do this because they need to know how much, or if at all, of the purchase price they need to withhold. The last thing I'll quickly touch on is debt and financing. US and China have very different approaches when it comes to debt and financing real estate projects. One of the biggest differences I want to highlight are debt equity ratios. Debt equity ratios affect how much a lender is willing to lend for a project. Debt equity ratio is calculated by the amount of the mortgage to the total value or price of the real estate. Internationally and in China, typically this ratio is 90-10, which means that the mortgage equals 90% of the current value of the property. In the US, the typical debt equity ratio is 70-30, which means that you can lend much less money. Regulations on financing in banks is also very different in the US. As a general matter, the US has much more stringent tax and reporting issues. I also want to highlight that sometimes Chinese investors want to do back-to-back loans, and these do not work for numerous reasons. A back-to-back loan is when an investor tries to put up a loan internationally in China and use that loan to capitalize on a loan in the US. The issue here is that there are huge tax considerations to take into account, so the main point is that it's not that easy to get around the restrictions. And that's just a couple of the considerations that Chinese investors should take into account.
Great, thanks. Okay, so we have about 10 more minutes. And so I'd certainly like to, before I start asking questions, I'd certainly like to get more questions from the audience. We do have one from Elaine Noneman, is I guess pronounce it. And her comment was, and maybe Michelle, you're the first one we should go for this one. She says there are many beautiful, spacious homes in her neighborhood that are bought by Chinese owners, but they're not being occupied. So what's going on here? Is it just a way to sock away money, or any ideas? Is that a big issue on the east side as an example?
I don't think it is an issue with even the homes, being vacant. I think, a lot of these homeowners have maybe traveled back to China, especially with the current situation over there being a little bit more different than over here in terms of how they're handling COVID and everything. So I don't think that it's odd. And a lot of times these investors, they use it as a second home anyways. So it will always still be here unless, they do plan to sell it. And we did start seeing, Chinese homeowners do some of that last year as well. But, with the vaccine rollout this year, I think it's still very strong that they'll be coming back. So even though that, it is empty, I believe even I have a stat here. Let me find it. Even at, the decline in international buying doesn't really hurt the U.S. real estate market because the foreign buyers really only account for 4% of the existing home sales. And that's from Market Watch that did a report from last year in 2020.
Right. Yeah, I can report there's a home in my neighborhood that hasn't changed their Christmas tree for 2 years in the window. And I'm quite sure it's a Chinese buyer that made an investment and probably will come back one of these days, but it's there. Right. Holly, I had a question, and that's are you seeing interest at all from Chinese investors? I mean, are you getting calls at all, or because your numbers show, almost zero sales, or is it just gone totally dead?
Well, not many new investors. Whatever I get calls are my old clients, people who have already invested here. They're not going to get the money back to China. They will keep investing here, but not much new money anymore.
Yeah, not coming in from overseas. It's basically profits they've made here being reinvested.
Maybe some other people still see it, but it's rare.
Okay. How about in either any of you? How about in other countries? Is Chinese money still going into Australia or Portugal or any place else, or is it pretty well dried up overall?
Definitely. I think it's fascinating how big and fast the Chinese global property market grows. I mean, China is still one of the largest international commercial real estate investors. The money is not coming to US. I mean, at the peak, if you remember my bar chart in 2016, the US, is their favorite destination. I think almost close to 50% of the money that outbound are going to the US. Now US is losing favor. The money is still going. That hasn't changed because China's economy is still going pretty strong. Doesn't matter, the trade war, the COVID, the GDP growth is still strong. So their money is going to Australia. They're going a lot of investment in Hong Kong, a lot of investment in Singapore, Southeast Asia, even Greece, because the price is very attractive there, and they have this open door policy. They probably can get immigration visa or whatever maybe it's also called green card there pretty easily. Remember, we had a period of time when we had EB-5.
Right.
And that's also coincides with the peak of Chinese money pouring in the U.S. market.
And thanks. And another question for you, Holly, is GAW Capital. The two things on GAW Capital. You said that was a Hainan vehicle, and of course Hainan's in a huge bankruptcy.
Oh, no. I don't think so. GAW Capital and Hainan are two different groups, two different entities.
Okay, and then James Cullen was asking us, is GAW Capital the single largest Chinese investor in King County? Do you know?
I think it's probably one of the largest investor in King County. Yeah. But I heard something even bigger. Not necessarily all real estate.
Right. Okay. Any other questions? I haven't seen any other questions coming in from the participants. I can ask a few more, but certainly, let's see. Here we go. Outside the 50,000 allowed to come in what other ways is money either allowed or is money coming in for real estate investments? How do Chinese people get more than 50,000, which is their limit? How do they get it over here? Paulina, you've got any ideas on that one?
I guess I can speak to that. So in my slides earlier, if they have a valid student visa, that allows the children who are going to school here to get an additional amount as well. So a family of 3, they get up to 150,000 per person. 50,000 per person, totaling 150,000. And then also, if you have a business here, with my partners from Ernst & Young, there's ways that, especially if you have a business here, you can, do it that way as well. And then, of course, there's loans you can do with some of the banks, HSBC, Cathay, and East West Bank, that also help with obtaining property here as well.
And can you use your assets in China pledged for loans here as an example?
So each bank will have a different kind of process, but they do verify, the funds that are in China through different multiple channels, and that, the Chinese banks So for example, Bank of China, they'll have to send over a documentation stating, that they do have enough funds in their bank, and then it's, stamped and notarized. And then the bank here, US Bank and Cathay and East West, they'll take that as well, especially when they're not verifying income or credit over here.
Great, thank you. Any other questions from our participants? This is for most of us, real estate is a very personal issue. So I know people are quite interested. Paulina, any other things that a Chinese investor, you talked about CFIUS and you talked about FIRTPA, any other things Chinese investors in particular need to be thinking about if they're buying property here?
Absolutely. And also my apologies, my laptop just completely died. So I'm calling back in on my cell phone. So the perks of working from home. But to go to your question, Nor, there's a couple items I do always want to highlight to Chinese investors when they're thinking about buying in the US. Mainly it's diligence costs. And these are things that Chinese investors need to think about before they close on the property. The first thing that I'll highlight is title insurance. And title insurance is something that's very specific to the US and not common in other countries. Other countries do not have title insurance. Usually the government will guarantee that you own the property, or alternatively, a law firm will provide a title opinion and say that you own it. Instead, in the US, we have title insurance, which is a policy that covers your ownership of the property. Title insurance is available to owners, lenders, and holders of leasehold interests. So in that case, that usually means if you're the tenant under a ground lease, it'll insure you for that. Title insurance policies insure you for the actual loss you incur after you buy the property. Unfortunately, it won't cover economic loss, but it will cover any actual loss that you incur. Examples of this where title insurance can be helpful is, for example, when there's a defect in title. For example, maybe 10 years down the road, you find out that your seller didn't have appropriate authorization to sell the property. Title insurance will cover you for that. It can also cover other things like lack of access or encroachments of your improvements onto other properties. That's why we highly recommend any buyer to obtain title insurance, because it can really protect you down the road. Usually the largest part of obtaining title insurance will be negotiating the exceptions, and that's what the title company will accept from your policy. Also, you can get endorsements to cover things that you're particularly concerned about. So you can request special endorsements to your policy to cover zoning to make sure that your property can cover you, or you can use the property for what you intend. Also, you can get endorsements for utilities if it's really important for you to have certain utilities there. So title policies can be tailored to what you need for your transaction. The next thing I want to highlight for all buyers of real property is that environmental diligence is a big upfront cost that they should really invest in. Usually, this takes the form of obtaining a Phase 1 ESA, and that stands for an environmental site assessment. A Phase 1 ESA is helpful because during the diligence period, you can figure out what kind of environmental risks are on your property. And that's important because you don't want to find yourself in a situation where you close on your property for $10 million and find out that you have a $2 million or $3 million remediation issue. So the really great part about a Phase 1, it's going to affirm whether you have a good and fair purchase price for what you're getting. And going back to the debt and financing point, most lenders in the US will require a Phase 1.
Right. Great. Okay, well, we're coming up. We only have a few minutes left. I want to add that one of our members, which is ICBC Bank, said that they can provide, and Kathy's written in here, they can provide residential mortgage loans by payment resources from foreign assets. So as we were saying, I guess if you can prove you have money in China, that they will take that in note when offering the mortgage. And then we've had a couple questions that are basically about with the current geopolitical situations, sanctions, putting on some Chinese government officials, et cetera. How is that impacting the market, or how do the real estate professionals, do they think that's going to be a factor in real estate investment here? Anyone have an opinion on that?
Nor like I said, you know, the Alaska U.S.-China talk is very frosty from the appearance, right? Everybody is saying the harsh rhetorics and all that. But I also read from somewhere, you know, behind the scenes, they're pretty amicable. So I think, like I said, I'm optimistic. I'm very optimistic. You know, the things went really bad, right? You know, in the last administration, China, you know, is viewed as an enemy of U.S. and all that. Of course, it has a big impact on real estate investment. Nobody wants to invest in a country where they don't feel like they're welcome, right? They might not even be able to get a visa to visit the property they bought. So the investment was put on hold. But with the Biden administration, I think things will improve, only because I think we were really at the bottom the last couple of years.
Okay. On that note, I think we'll wrap up. I think for guys like James and myself, who've been around quite a while, we saw, again, the big Japanese investment in the 80s. They talked about golf courses and hotels, et cetera, et cetera. And that slowed down, but it didn't stop. I think they just bought less properties that weren't as high profile. And hopefully that's what maybe will continue with the Chinese investment in the future. We'll continue to see Chinese FDI, but it may not be in these big high profile things. It may be just normal industrial properties or residential properties, et cetera.
Totally. And that's more organic growth, more sustainable anyway.
Yes, right. Yeah, I think that's right. Okay, Mon has posted that we have a YouTube channel and we post most of our webinars up on that. So it takes a couple days for us to get them up there, but we'll put most of this one up, I think. And with that, we'll conclude. Mon, any closing comments?
No, just, you know, thank you all the panelists, and thank you everyone who joined us today.
Okay, and our next one is April 6th. It should be good. It will be talking to several business leaders, the head of the Chamber of Commerce, the American Chamber of Commerce in Shanghai, and several of their members that are CEOs of American companies in China, and they'll talk about conditions in China, how their business is doing, et cetera. So it should be quite interesting. So